Shall we?
Yes, sir.
Yes, sir.
Okay. So for the operating activities have to do with those activities that are in daily operations. All right. So if I ask you for your activities in your daily operations, you are looking at your income statement. Am I right? Because that's where you have statement of performance. Please, am I right?
Yes, sir.
Okay. So this statement of performance, we have it in our income statement. All right. And then what are those things in your income statement? Everything that has to do with your trading account, profit and loss account, your expenses, your what's it called? Uh, Interest paid,
Let me finish.
right? Tax paid. Now, tax paid is definitely in operating activities. Interest paid, all right, for the you can put it in operating activities, you can put it in financing activities. You can put the operating activities, you can put the financing activities. All right. Now, then interest received. Interest received is automatically an investing activity. Okay. So your interest paid, and also I think we have another one, dividend paid. Yeah. So dividend paid and interest paid, you can put it in operating activities, you can put it in financing activities. You can put it anywhere of the two. But for the sake of your FR in your ICANN study pack, they put dividend paid and interest paid under uh, financing activities. All right. So that is it. But that doesn't mean you can't put it in operating activities. Now, when you have a question that has income statement and statement of financial position, and you have to do cash flow statement, the trick is this: for your operating activities, all right? For your operating activities, you can find them in your where to find it. Your operating activities, you can find it in your income statement, all right? You can also find it in your current assets and current liabilities. Are we together, please? Are we together?
Yes, sir.
Okay.
Yes.
That's where you can find your operating activities. For your investing activities, investing activities, you can find that in your you invest in non-current asset bar. Is that where you invest? Investing activities, you invest in your non-current assets. So your investing activities can be found in your non-current asset. Another place we can find our non-current asset is what? Our PPE or asset register, right? PPE schedule. Nobody is saying anything, or asset register. All right. Then for your financing activities, you can find that in your uh whoa, okay. You can find that in your balance sheet under the finance by. You know what we mean by finance by?
Equity.
Yeah, your
Yes.
equity, your shares and liabilities, your equities and your liabilities. That's where you can find that. You can find it in your equity. You can also find it in your liability. All right. So that's what we have there. Are we together, please? Are we
Yes.
together? Okay.
Yes, sir.
Now that is that. Now,
Yes.
Automatically, what am I trying to do here? There, when we say a financial statement, there are two basic things that we have as a financial statement: income statement and statement of financial position. Every other account are found in these two accounts. For instance, your PPE schedule is in your balance sheet, abi?
Yes, sir.
Your statement of changes in equity is also in your balance sheet. That's where we have the finance by, right? Your expenses is in your income statement. Your depreciation is in your income statement. Do we understand? Your depreciation is in your income. So everything you are looking for, all the ledger accounts you want to prepare, all the schedules and tables you want to prepare, you can find the two of them in your income statement and statement of balance sheet. So which means when you are doing your income statement and statement of balance sheet, I mean statement of financial positions, two things are very important: your income statement and your balance sheet. Okay? Now, for your income statement, everything in your income statement are where you can find your operating activities, because your income statement is your statement of operation. All right? When you're in that same operating activities, so now let's take operating activities. You will find operating activities in your statement of operation, which is income statement. Then also your balance sheet. If you are using T format for balance sheet can be divided into four parts. Am I right? If you are using T format, am I right? Hello? Can someone hear me?
You're right, sir. You're right,
Balance sheet
sir.
can be divided into four
We can hear
parts.
you.
Balance sheet can be divided into four parts. So what are these four parts? What are the four parts, please?
The non-current assets,
The
current
non-current,
assets,
the current asset,
equity,
equity.
and non-current liability.
Thank you very much. See, I really, really appreciate that. So we have equity, we have liability. We have equity and non-current liability. Equity and non-current liabilities. They are together. Do you understand? Your equity and non-current liabilities are together, right? Then we have the current asset, current liability under it. Then on the other side, we have non-current assets, right? And then below it we have current assets. Are we together, please? Are we
Yes, sir.
together? Now, all these four are the things we have in our balance sheet. Out of these four, your operating activities will take these two, inclusive of your income statement. Your operating activities will take these two, including your income statement. Do we understand, please? Your operating activities will take income statement as well as these two, current assets and current liabilities. Your investing activities will take non-current assets only. Your financing activities will now take current liability. Is there anything left that we have not picked in our income statement and statement of financial position? Is there any other thing left? Is there any other thing left?
No, sir.
So you can see that's how to divide it. Okay? Once you understand this, that at least you have
No, sir.
What's your question, please? Yes, what's your question? I thought the person who said no wants to ask a question. Okay, let's proceed. Now, now that I have divided this thing into four and I've shared them accordingly, okay? Now, what are the operating activities that we can have? The first thing, you've been given the format, you have your profit before tax. What's our profit before tax in the question? What was our profit before tax in the question?
For which year, sir?
Sorry?
Which year? We have 2 years then.
Which year are you asked to solve?
Okay, 2019.
Uh-huh. Miss Zuli, are you there?
Yes.
62,500 negative
What do you call it, please? What do you call it, though?
6,500.
Okay. So we have
62,500
62,500 loss, right? And it's a loss, right?
2019.
I said it's a loss, right?
Yes, sir.
Okay. Now, in that same question, what do we have?
Yes, sir.
We are to add back non-cash items, right? Am I right?
Yes, sir.
Finance cost.
Add non-cash items. So, or adjustment, you can call it adjustment for non-cash, or you can call it adjustment for non-cash items. You can say addition of non-cash items. Shall we proceed? Shall
Yes.
we? So, what are the non-cash items in this question? In our income statement, what are the non-cash items in our income statement? Now, what's the essence of these non-cash items? The non-cash items are those items that they are not cash in nature. We didn't make any payment. Do you understand? We did not make any payments on them, but we still recorded them as payment, even though we didn't actually make any payment on them. We did not receive that money. We just recorded it as a receipt. So usually it comes in form of a provision or reserve. All right. For instance, now you agree with me that your depreciation is a provision, amortization is a provision. What do we call it? Loss on disposal, profit on disposal. They are all provisions. Loss and profit is not a cash flow. It is not, they are all non-cash items. Sorry, not all provisions. They are all non-cash items. A profit is not a cash item, right? A profit is not a cash item. Please, am I right? Or is there no difference between a
Yes, sir.
profit and a cash flow? Is there any difference between them, please? Hello? Miss Zuli, are you there?
I'm here, sir.
Can everyone please unmute and let's have a class? Please. Can we all please unmute ourselves so we can have a class, please? Now, non-cash items, your depreciation, your loss or profit are not cash flow. What do you mean by cash flow? Cash flow means movement of cash in and out. Do you buy revenue? Or no. Do you buy profit? People pay for revenue, but there's a difference
No.
between revenue and receipt. Revenue is that you have sold, you have earned the sales, you have earned the money, but it is possible you have not received it. All right, so that is that. Now, where we have non-cash items, we have to add them back. So let's look at uh, our question. We have distribution costs. Do you have any additional information on the distribution cost? What makes up our distribution cost? We need to look at that. All right. So do you have anything on distribution cost? Let's check. Any additional information on distribution cost?
No, this market condition. Okay, it's not.
Market condition. Does it have to do with distribution costs?
No.
I need something that has to do with distribution costs.
No.
And that's why when you are reading your questions, I told you at first that before you can read any question, go to the requirement. If you go to the requirement and you have known what your question is, the next thing is that you will now keep tab of all the information you will need so that you don't have to read the second time. All right. So what do we have in this question? Do we have any additional information on distribution costs? I'm not sure
No,
I heard
sir.
anything on distribution costs.
No.
No, huh?
There's nothing on distribution cost.
Okay, so what else do we have? Uh, Admin expenses. Do we have anything on admin expenses?
No.
Okay, so if we don't have anything on admin expenses,
Yes.
what else do we have? Investment
There
income.
is something I don't.
Any additional information on admin expenses?
Yes, sir.
I'm listening, ma.
Additional information. Additional information for.
Additional information for in response to the downturn, right?
Yes.
Right?
Yes, sir.
Okay. Now, in response, the company has made a number of employees redundant, incurring a severance cost of 32.5 million included in the cost of sales. Undertaking cost savings in advertising and other admin expenses. There is no figure that has been added to the admin expenses. All
Okay.
right? So that figure was
All
not
right.
added. And moreover, this 32.5 million is a cash item. You paid a severance cost. It's a payment. All right? So that's
All
it.
right.
Now, then let's go for which other one we have. Investment income. Do we have additional information on investment income? Any additional information on investment income? What is our investment income? 1,250.
1,250.
Now let's check our investment income. If the money was received or not. Do you understand? Where do we have information on that investment income? Do we have anyone?
No, sir.
There is none, sir.
Okay. Now, investment income was deducted in the question, right?
Mm.
Where is our investment income?
It
So
was
investment income is under other income, right? Now, if you look at this investment income, is it a financing activity, operating or investing activity?
It should be an investment activity. This
So
is
I
a
mentioned something earlier. I said your dividend received and dividend paid are treated separately. In the same vein, interest received and interest paid are treated separately. Now, investment income received. You receive an investment income when you invest. So it is an investing activity. All right.
yeah.
Investment income is an investing activity. So it has nothing to do in operating activity. Do you understand? Investing activity should not be in operating activity. And this 1,250 was added as part of our income to the gross profit, right? We need to remove that gross profit. So what's our investment income here? What's investment income? How much is it, please?
1,250.
1,250, right?
Yes, sir.
Okay. So I am to deduct the 1,250 from the loss, am I?
Okay.
Or I have to add to the loss because, well, okay, I'll use it. It will still be minus since I want to deduct it. So it will be 1,250. I'm taking it away because it has been included as part of that loss. So I need to remove it. All right. So I have that 1,250. Then what else do we have after investment income? We have finance costs. All
Mm.
your finance costs, whether you like it or not, there are some of them that are, like I mentioned, finance cost is an financing activity, right? Did I mention that earlier?
Yes, you did.
Okay. So our finance cost also should be removed. How much is our finance cost? 15,000, right? Am I
yes,
right?
sir.
Okay. What else do we have?
It's um,
Huh? So that means we are done with the income statements, right?
Mhm. So
In
I think
fact,
that additional information about finance cost.
all of these are still not non-cash items.
Sir.
I'm coming, hold on a second. Non-operating activities. So they are not operating activities. All right. So now we are to adjust for non-cash items. So what are the non-cash items that we have?
Depreciation, if there is.
Eh?
As if there is depreciation.
So let's check for our depreciation. Let's check if we have depreciation. Yes, we have, not if we have. We read it out earlier. We've done information one. Now information two has an impairment. All right. Dongoyaro has not been removed from this effect, and property have suffered impairment loss of 125 million. Right. Now the excess of these losses over previous surpluses has led to a charge to cost of sales of 37.5 million in addition to the normal depreciation charge. So the impairment we have in this question is 125 million, right? Am I right?
Yes, you are.
yes, sir.
But they are saying that that 125 million loss, so the excess of this loss over the previous surplus, that means there was an impairment, there was no impairment loss last year. Do you understand? There was no impairment loss in the previous year. And because there was no impairment loss, right? we had we were able to reduce our impairment loss this year to 125 million. So what is the impairment loss for last year? Can we find our impairment loss for last year? Can we find if we have any impairment loss in our previous year?
Like we should solve for it using total and the rest.
Total what?
Total assets plus, like I'm just asking, are we going to solve for it?
Yes, we'll solve for it. That's what we are to do. We
Okay.
are to look for what the impairment for the year. What is that impairment for the year?
Mm. Since there is
Do
no
we
favor.
understand?
Yeah, okay.
So what will be our impairment for the year?
Mm.
That's what we are looking at here now. Shall we?
Is there any
Sorry?
revalue? So, is there any revalue that here?
What do you say?
Is there revaluation amount here?
Is there any revaluation? Let's check if there is any revaluation.
Was that what we use? Okay, this one is revaluation reserve. What's the reserve? It's not like the full amount. Last year, 112,500.
Where is the 112,500?
Revaluation reserve. Like is a reserve. Is
Where
it
is it?
the
Which additional information, please?
Oh, sorry, is inside the statement of profits or sorry, statement of financial
Under
position.
equity and liability.
Under
It's under
equity and
equity and
liability.
liability,
Thank
sir.
you. So we have a
Yes,
revaluation
sir.
reserve of 112,500. Now, what are we saying in essence? Look at your asset. Sorry. The question says that the excess of this loss over previous surplus has led to what we charged this year. The excess of this loss over surplus has led to what we charged this year. Now, there was a surplus last year, all right? If our asset is suffering from impairment, it means fair value model has been used, right?
Yes.
It means fair value model has been used. Now, what's that fair value model used? That's why we have it in our revaluation reserve, right? Which is 112,500. That is the surplus. So this surplus of 112,500, we have deducted it in this 125 million in the year. So the difference is what we kept in our cost of sales.
That's 37.5.
Do we understand? The
Yeah.
difference between this 125 million and the 112,500 is what we have kept in our cost of sales for the year. You can see how hypocritical companies can be. When you made a profit, you kept it in your reserve. When you have a loss, you put it in your income statement to write it off. So that is what we have here. So which means this 125 million, we have to deduct the 112,500 from it. That is what the impairment loss that has been charged for this year in our cost of sales. That is the impairment loss. All right. So our impairment loss now, impairment loss is 125 million minus 112.5 million. What will that give us, please?
12,500.
12,500.
Yes, sir.
Okay, 12,500. What else do we have, please? Do we have depreciation?
Yes, sir.
Okay, what's our depreciation? There is no additional. Additional or disposal of our current non-current asset. In response, we have 39 million taken as cost savings. Yeah, we have this 12.5 million. Okay, now, so if we don't have the depreciation stated in the additional information and even in the income statement, we can get our depreciation now, can't we?
You can.
So how do we get our depreciation?
You have costs. Do you have
What are
any
the assets?
cost of
We have PPE, right?
440,
So where's our PPE?
440,000 at the
Where is
million?
the PPE? Where is it?
444.
So at the beginning of the year, my asset is 612,500, right?
Yes.
Then,
Yes.
uh, what is it?
You suffer for impairment.
It suffer for impairment. So before it suffered for impairment, you know that it was after it suffered for impairment that we had it as 440,
Yes.
right? Am I right?
Yes,
Yes,
sir.
sir.
It suffered for the impairment of how much in the year? So let me do my non-current assets figure. My PPE share. So balance brought forward. What's the balance brought forward? 612,500, right? Am I right?
Yes,
Don't
sir.
tell me. Am I right?
You are right, sir.
Okay. 612,500. Then that's at the beginning of last year. Then less impairment. What's the impairment for last year?
One hundred twenty-five thousand.
125,000. I am to less it. 125,000. Right? And that's what gave us a closing balance of how much?
487,500.
487,500. But how much did we eventually have? This should be on my expected closing balance. So
440 is what we have
expected carry
implemented.
down. But what is the actual carry down now?
440.
Four hundred
440.
and 40,000.
What's the difference between them?
87,500. No, sorry, 47,500.
47,500.
47,500. 47,500. What is that 47,500 now? That's the depreciation, right?
Depreciation.
It's not. Is it depreciation?
That will be the depreciation. So had it been we were given depreciation first, had it been we were given a depreciation figure, we would have deducted depreciation from the opening balance to arrive at the expected uh,
Yes, sir.
closing balance. Yeah. So which means our depreciation is 47,500, right?
Mm.
Okay, so let's add back depreciation. Sorry, I'm still on the sheet.
Hey.
Depreciation.
Different.
Add it back 47,500. What else do we have? Apart from the depreciation, what else do we have? That's not done already. Let me bring it to us. What else do we have apart from depreciation? Have we seen it? See this asset. Fair value asset, I mean financial asset fair value through profit and loss. It has reduced by 40,000, right? It has
Okay.
reduced by
Yes, I saw it
it
now.
has reduced by 40,000.
By
And that's
40,000.
an outflow, right? That's an outflow, right?
Yes, sir.
So if it has reduced by 40,000, we need to bring it back in. All right. So what do we call it again? Financial asset, fair value of financial asset. But it's a loss, right? So let me see loss on fair value of financial asset. much is it? 40,000. What else do we have? We've taken all the two information. Am I right? If you have taken it, that's all. So what do we have in total? I have 113,750. Please, you can confirm from your end.
I'm sorry. How did you come about this last 40,000? I wasn't really.
So the 40,000 here is here. This fair value is not an actual cash movement though, but we are saying that the value of our increase has reduced by 40,000. So we have reduced our NCA, non-current asset, by 40,000. And this is fair value through profit and loss account. Because some of you might be wondering that I mentioned that anything under non-current asset should be under uh, investing activities, right? But this one is true profit and loss. It's a fair value through profit and loss account. All right. So that's why we are bringing it to our P&L account, our operating activity. All right. And that's what we have there. So 100,000 in 2018 has reduced to 60,000. That is a loss of 40,000. That loss, we need to add it back. Okay. So that's why we're having it 40,000 added back. Do you understand, please?
Yes, sir. Sir,
Okay.
you,
Have is
from
next thing we have is
sorry,
changes
sir.
in working capital. Changes in working capital. What's our changes in working capital?
Inventory, receivable, and payable.
So changes in working capital. Your working capital definition is current asset and current liability.
Aside cash.
Aside cash, yes. Apart from cash and cash
Cash.
equivalent, like overdraft. Are you there?
Okay. Yes, sir.
Hello.
Apart from cash and overdraft, current assets and current liabilities. All right. So that is it. So what are the working capital we have in the question? Yes, what's the working capital we have in the question?
Trade receivable.
Yes. And receivable.
Trade receivable.
Let's start with the first one now. Why are we starting with receivable? We have inventory and work in progress.
In progress.
Right?
Oh,
Do we have an increase in inventory or a decrease? Is our inventory increasing or decreasing?
increase. That means cash was used.
That means cash was used, but we
Yes.
have bought more inventory. Am I
Oh,
right?
yes, sir.
So that is an outflow.
We will be removed.
That is an outflow. We have bought more inventory.
Hmm.
So what's the decrease?
How God,
So we
fifty-five
have
thousand.
increase in inventory.
Yes, 7,005.
That's 55 minus 47.5, right?
I can't see your screen again. I don't know if it's only me.
Please, can
Is it
somebody
only me?
else see my screen?
Yes,
Eh?
Huh?
yes, I can.
Okay. So
Let
we
me
have
Yes,
55
I
minus,
can.
please check your network, minus 47.5 million. All right. And that gives us what?
7,500.
7,500.
7,500. Since this is
7,500.
an outflow, that means we will bracket it.
Yes, sir.
Then what else do we have?
Bank.
Receivable.
Trade
30,000.
Trade
receivables.
receivable.
It's zero.
Our trade receivable is the same thing. So it will be
Yeah.
zero.
Yes,
What about bank? Are we using bank?
No, sir.
yes,
Cash only.
Okay. Now let's go to our current,
no.
current liabilities straight. So we have payables. Our payables have also increased.
That means cash reduced.
Payables have increased.
Cash increased. So cash increased
So what does
because
payables mean? We are owing our customers, I mean our suppliers,
there's amount of cash.
right? We
Yes,
are
sir.
owing our suppliers,
15,000.
right? We are owing them more, which means we have more money inside.
Yes,
We are
sir.
owing them more. That is an inflow, right?
Yes, sir.
Okay. So we have increase in payables,
15,000. It's 5,107.
which is how much? 85 million
15,000.
minus 7 million, Abby.
5 minus
And that gives us
15,000.
15,000. What else do we have?
70, not 7.
Yes, what
Current
else do we
tax
have?
payable.
Eh?
Current tax. Current tax payable.
Current tax payable.
Yeah, that's 45,000.
So current tax payable, we also have
Okay.
tax paid. Abby?
Deferred
Mm.
tax.
No, we have all of them. Current tax payable and tax paid. All of them should be under tax. So we can treat it under our tax paid, right?
Okay.
So let's leave that. Now, these are the changes in working capital. What do we have under them? In total, what do we have? 7,500 plus, Abby. Am I right? Now, let's go to our finance costs as well as our tax paid. And don't forget, I told you that your finance cost paid, I told you your finance cost can be under operating activities, it can be under financing activities. All right? It can be under operating activities, it can be under financing activities. Your I can study pack example, put it under financing activity. But that doesn't mean you can't have it under operating activities, right? So in my own question, in my own solution, I'll be putting it under operating activities. That's the way I've always done my own. Even in my diet, in my ICANN diet, when I was writing my FR, yes, my question number one was cash flow statement. So that's it. Now, for our finance cost, right? So what will the finance cost paid? What will be my finance cost paid? Yes, what's the finance cost paid? Now, for the finance cost paid, let's check our question, right? How much is the finance cost? In our income statement, we have it to be
So I'm not seeing your
15,000.
screen. Oh.
Can you see my screen? Can you see? Confirm.
Just log that and log in. I can see it. I can see it, sir. Just log out and log in.
Shall we
The,
proceed, please?
yes, sir.
Okay. So for the finance cost, all right, for the finance cost, we have finance cost for 2019 to be 15,000, right? Now let's check. This is the finance cost for the year. We don't know if that was what was paid. Do we have any additional information on finance cost? If there is an additional information on finance cost, it could simply mean that the finance cost was not fully paid, or maybe we paid more than the finance cost for the year. For instance, if finance cost for the year was 15,000, we can pay 17,000. What can make us pay 17,000? Maybe we had some finance costs we didn't pay for last year. Finance cost owings, we can pay them this year and then add it together. So last year and this year can be finance cost paid. And don't forget, cash flow statement is on what was paid. All right? Cash flow is what is on what was paid and what was received, not what was for the year. Your tax for the year can be different. You can be owing a tax of 5,000, but eventually you don't have enough money to pay that 5,000. You can pay 4,000 as tax and carry the remaining forward as a deferred tax. Do you understand? So that's an additional information. All right. So that is it. Do we have any additional information on finance costs? Any additional information on finance costs?
So 5.
Eh? Information
Additional
5.
information on 5.
So
5.
despite, the difficulty in the credit market has meant that the finance cost of our fixed interest bank loan has increased from 12.5 to 15 million, which is the same thing as what we have here. Where is it? 12.5 to 15 million. We paid 12.5 last year. We paid 15 million this year, right? That statement is only endorsing what we have, right? Now let's
Okay.
read further. In order to improve cash flows, the company made a right issue during the year and reduced the dividend per share by 50%. They reduced dividend per share by 50%, right? So that is what we have there. Now, it means that there is nothing that we didn't talk about making additional payment for finance costs. That means our finance cost is still the same thing. It has increased to 15 million. All right. So that should also be our finance cost paid. How much? 15 million. Now, someone can simply ask, now this is an outflow. Am I right? This is an outflow. Someone can simply ask that when I know that I'll still bring back my finance cost paid, why did I add it here when I know that I'll still subtract it here? Who can answer that question? Who can answer that question? Now, the answer is that whatever you want to do, your net profit should be profit before interest and tax. Profit before interest and tax is what you should have. So ordinarily, if you see a question that has profit before interest and tax, that is what you should go for. Okay, now let's go for our tax paid. What is the tax paid? Good question. Now we have a deferred tax. Is someone using a typewriter
Oh,
or
sorry.
is
Let
it
me
a pen?
let me off this thing. That one I passed my neighbor generator.
No, 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 it's not generator. No, someone is doing ashofi in Yoruba, or what do you call it? Or using a typewriter. I've heard this. I've been hearing this since. Now for the tax paid. Now, income tax at 30% expense or relief. We have 10,000 income tax here, which this one is a relief, right? This one is a relief. How did we arrive at this relief? Hello. How did we arrive at this relief? Let us check. Do we have any
Savings.
deferred tax in the question? Yes.
Yeah, the factors.
So we have a deferred tax of 17,500 last year. We have a deferred tax of 30,000 this year. What's the difference between them?
12.5.
12,500,
That's
right? Now, this deferred tax of 12,500, they gave us at the end of the day in our income statement, we have a relief of 10,000. What does that mean? This one, this 10,000 is not an expense, oh, it's an income. Oh.
like that's savings.
Do we understand?
Yes. So
It's an
this is
income,
the
oh,
same as tax savings, well.
like tax savings. So 12,500. Now, it means they gave us additional 10,000. That's why we have it as a relief here. Am I right? So if they
Yes.
gave us a relief of 10,000 credit and we were owing them
So,
12,000 difference
mm,
in our deferred tax, what does that tell us? Now a deferred tax is a liability, right?
yes,
Yeah,
current
now
line.
let's do the account. What do we call it? Deferred tax. I'm not using T format though. So deferred tax balance brought forward is how much?
12,000. No, sorry, 10,000.
75.
17,500
Uh,
75.
in the balance sheet. 17,500, right? Now, do we have any tax for the year? No. Normally, if there was tax for the year, what do we have?
I've added it together now.
We would have added it back.
It's
Yeah.
Do you
Alright,
understand?
that's relief.
So let me use
10,000.
closing balance minus opening balance. I don't know if you understand what I'm saying. Do you understand, please?
Yes, sir.
Okay, so let me use
No,
closing
sir.
balance. Let me use closing balance. Balance carried down. What's our balance brought down? Let me use brought down. What's the balance brought down? 30,000, right? Then minus balance brought forward.
I think
Let's balance brought forward. What's the balance brought forward? 17,500,
is
right? And that gives us how much? 12,500.
12,500.
Someone is trying to say something, but I can't hear how. Eh?
plus
What are you saying, please? We can't hear you. Okay, maybe we can't hear that person. Then also, we have a tax relief. What's our tax relief? 10,000, right? So in total, what do we have?
10,000.
This will give us 22,500, right? So which means the actual tax for the year is this 22,500, right? Tax for the year, or no, tax paid. Tax paid is 22,500. Now, what is this tax relief giving to us? It's giving an excess payment. So instead of we paying 12,500, we paid 22,500.
Hmm?
Do you understand? Instead
No,
of paying 12,000, how did we are using T format now? This thing like me.
it will reduce our tax, sir.
Sorry,
I thought the tax relief was meant to reduce the
that
tax.
tax relief is like an overpayment.
Mm,
We did not
yeah.
do any, we didn't do anything that gave us, that government gave us that tax. All right.
Okay.
So what
Mm,
that tax means is that we overpaid tax authority. So we have the relief there. And don't forget, what did they call it? What's the name they called it? They called it income tax expense, which is in bracket slash relief. It's like an overpayment. So in actual sense, what we paid was 22,500. Okay? So if you
okay.
are using your, what's it called? T format, balance brought forward will be on the credit side, balance carried down will be on the debit side, right? Tax relief is an income. Am I right?
Yes, sir.
Uh-huh. So that tax relief, instead of the if it is an income, it will be on the debit side of your deferred tax, right? So 30 plus 10, that's 40. 40 minus 17.5. All right? We give you 22.5. This is what I'm saying. For those
Oh,
of you who don't understand what I'm saying, no, I don't even have to type. Please, if you need the T format, just let me know. I'll send it to you. Someone is trying to come in.
Even the Babalawos can testify that they want younger.
Yeah.
We can hear you sing, oh. So our tax paid now is 22,500. 22,500. Any other thing? I think that's all for our cash flow from operating activities. So what do we have in total? In total, what do we have? 21,250. 21,250 is what I have here. So this is my net cash flow from operating activities. So they call this figure, I can decide to add it together before my finance tax, my finance cost. I can decide to add this together. They call it cash flow from operation. If I add these three together, 58,750. We can call it cash flow from operation. All right. So this is my cash flow from operation, and here I have my cash flow from operating activities. Okay. Now the next one we have is cash flow from investing activities. So cash flow from, we have our investing activities. I can simply make this.
So it didn't later says why we actually later we added. Okay, okay, okay. Sorry. You said it because it was profits before tax,
Yes,
the
now.
finance stuff. Okay.
So cash flow from operating activities. Now let's go for cash flow from investing activities. Cash flow from investing activities. So what are the investing activities here? I've told us that we invest in non-current asset. What are these investing activities in the question? So we
So,
have our PPE, right? Right? Hello? Hello?
yes,
Yeah.
sir.
Now we've considered
Investment
in our
in
investing activity, we have considered
income,
this PPE, property, plant and
sir.
equipment, which is from the revaluation or something, right? Am I right?
Yes,
Uh-huh.
yes,
So the only thing we have that we removed is this investment income. Am I right? Investment investment income. How much is our investment income?
1250.
So we have only one item here, 1250, right? Which is also what we have. That means our net cash flow from investing activities is also 1250. Okay.
So
Yes, sir.
this doesn't mean that we have to remove active investing income from non from PPT. What do you even do here? And now we are adding it back.
That means you are not following. We
Finance.
remove the investment income from operating activities because it is not an operating activity, it is an investing activity. We removed it from the operating activity and brought it down to investing activity.
Okay.
Mm. So for our financing activity now, right? So we move now to cash flow from financing activity. Now, what will be the cash flow from our financing activity? We finance our business with
You're
what?
not talking to.
We finance our business with what?
Share premium,
Uh-huh. So let's look at the question now.
dividend paid, loan notes,
So
borrowings.
where do we start from? We start from the ordinary share, equity and non-current liability. So we start with that if there is anything, or our income statement.
Yes, sir.
There is nothing in the income statement here. So let's start with our equity, ordinary share. Ordinary share increased. Am I right? Hello?
Yes, sir.
Our ordinary share capital increased from 300,000 to 325,000. Am I right?
Yes,
Nobody
sir.
is following me, Abby.
Yes, sir. Yes,
It
sir.
increased, sir.
So it has
Yes, sir.
increased. Now, this
Yeah.
ordinary
Yes.
share that increased, eh? Do we have any additional information for it? We have an additional information on it, right? Which says that in order to improve cash flow, the company made a right issue during the year and reduce the dividend per share by 50%. Right? What is a right issue? Right issue is that our our shareholders, existing shareholders, we gave them a share option that instead of us paying you dividend this year, can we pay you another share? Is that what it means?
Yeah.
Uh-huh. Instead of paying you shares, I mean instead of paying you dividend,
Yeah. Former
we want you
shareholder.
to subscribe into our shares. So that is it. Now we have that right issue, right? How much did we get from our right issue? How much? That's the 25,000 increase, right? Am I right? Hello.
Yes, it is.
Yes,
So that
sir.
is where we
Yes,
have
sir.
our
Yes, sir.
now 25,000. Now if you look at the previous year, there was nothing like share premium. But this year we have share premium. So which means the share premium also came with the right issue, right? So let's do our right issue. Right issue. How much is the right issue? How much is it? 325 minus 300. Abi, am I right? And that gave us what?
Yes, sir.
25,000. What else do we have? We have share premium. Abi, which is another 25,000. What else do we have? Yes, revaluation. Our revaluation reserve has reduced, and we have taken into consideration this one to 500. Am I right?
Yes.
The 500 has been considered, right?
Yes, sir.
Okay. Then which one is next? Retained earnings. Our retained earnings. What do we do to it? What's our retained earning at the beginning of the year? 162. What's the retained earning at the end of the year? 90,000. Right? So our retained earning has changed. Right?
Yes.
Hello.
Yes.
It, it
Yes.
has changed.
Yes.
Yes, sir.
Okay. So let's do our retained earnings. Retained earnings. What's the difference? What's the retained earning at the end of the year? I think 162.5, Abby. Who is checking the question for me now? What's the retained earning at the end of the year?
90,000.
At the beginning,
90,000.
or Okay, at the
Beginning
beginning was 165.
162.
At the beginning was 165.
1,500.
The end was 90, right?
Yes, sir.
So that means our retained earnings
Reduced.
reduced, right?
Yes, sir.
Okay. So if it has reduced minus 90, now I'll say 90 minus 162.5.
72.5.
90 minus 162.5. And that will give me what? 72.5, right?
Yeah.
72,500 in jackets. Abi, it's a loss now. It's an
Yes.
outflow.
Yes, sir.
Then what else do we have? What else do we have? On that same information, our dividend per share reduced by 50%. What's the dividend paid? How much was the dividend
They
paid?
didn't give us.
They did not give us. We need to look for it.
Yes.
Yeah, now. What was the dividend paid in the previous year? Do we have any dividend paid in the previous year? Not given as well. So how do we get our dividend?
Dividend.
Mm-hmm.
Was 50%.
Eh?
They
And
just told us the dividend was reduced by 50%.
And so what was the dividend before? What was the dividend paid before? Let's look for what the previous dividend was. Has increased our financials from 12 to 15. Another 20 starts to write easy was doing some reading of this. Yes, what's the dividend though? Who can help me?
oh,
See, the way you are breathing is too heavy. Oh. Just take it easy.
as well.
Don't worry, you will survive ICANN as well.
Amen.
Yes. Who is helping me? Who is
Amen.
teaching
Oh.
me? What was the dividend paid?
I think there is a formula now. How do we calculate dividend if it's not given? If there's dividend per share or something, we
So
can use
the
that.
dividend, are we giving dividend per share?
I doubt. I'm just saying.
Uh-huh. So they didn't give us dividend per share, but they said we made a right issue during the year and reduced our dividend per share. We should have a dividend per share in this question.
We should have.
We don't have any dividend at all. We don't have any information on dividend at all.
Hey. Hmm.
How did we get the dividend paid last year? Yes, how do we get it? Can someone
So,
think?
what's the
Yes,
formula
please
for
tell us.
dividend? Maybe we can get it from that.
From
Is there
where?
any formula for dividend?
Is there any
Is
formula
there?
for dividend?
Uh,
Uh no. You must have retained earning. You can have retained earning ratio, which is retention ratio, and then dividend ratio, right? You can be given your dividend per share. So with that, we can get it. But we are not even giving dividend per share here. So what do we do? Yes, how do we get it? Can someone try?
maybe it's with that rights issue. Oh,
Without the right issue, what was it?
it's, where is that right issue
I
again?
think this dividend is the only thing that is keeping us, right?
Yes, sir.
Or is there any other thing? Let's check. Let's go further. Let's leave the dividend. We are coming back to it. We have a bank loan too. We've taken our deferred tax, right? We have a
Yes.
bank loan from 125 to 100. That one has reduced, right? Am I right?
Yes, sir.
Okay, so let's leave dividend, or let's just put it, let's put the information here. So bank loan, is that an inflow or an outflow? The bank loan.
There's an inflow. It reduced.
No, now, when your bank loan reduce, it means you have paid some
Okay.
of your loan.
Okay. Yes, that's what I'm saying. It's an inflow. We have cash, right?
It's an
Have we reduced?
outflow.
Okay, okay, we reduced
What is
cash,
an
yes.
outflow? You are owing bank 100,000. You pay them 50,000 out of it. Is that an inflow or an outflow?
It's an outflow. We have paid them some money.
So what's the difference?
25,000.
125 minus 100, Abby. So we have 25,000. What else do we have?
25,000.
I thought
Okay,
25,000 should be in
It's
jacket. Is it not
25,000, sir.
100
yeah,
minus
25,000 is what you
125?
want to put it. So if we don't have any, let's see, if our account is balanced, that means we'll move on. Or that means there is nothing like dividend. How much do we have here? Minus 47,500. Minus 47,500. So this will be my net cash flow from
Hello, sir.
financing activity. Yes, sir. Go ahead with your question.
Sir, please, when you were calculating the retained earning, what about the profit for the year?
Where is the we've taken the profit for the year now. Did we not start with the profit for the year? We started with net profit, which is profit for the year. Or we are looking at the net profit after tax. Hmm. I think you're right. I think you are right. No, 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 you are not. We've taken net profit. We've taken profit.
Yeah.
You can take your net profit or profit before tax. You don't need profit for the year. This loss for the year has been included in your retained earning to reduce to 90,000. The loss for the year has been considered.
Okay.
Yes, the loss there has been considered. Our retained earning here was 162,500, right?
Yes,
Remove
sir. Yes.
52,500. I mean, how much is it? Remove 52,000 from it.
90,000.
That's 90, Abby. No, no, that's not 90.
52,500
It's
minus
90, sir.
plus 90.
So that's how they got the retained earnings now. So you can see they've considered it. Do you understand, please?
No, sir, I did not. I don't understand, sir. Sorry.
I don't understand though.
Okay. How much did we have as retained earning before? 162,500,
500.
right?
A lot is 52,500.
Now, from that 152,500, we said
Yes,
we made
sir.
a loss during the
Mm-hmm.
year. If you have a profit, where do you add the profit to? You add it to, is that not so? Is it not
Uh,
so?
mm,
To the,
If you have
yes,
a
sir. That's to the
profit, what do you
beginning.
do?
Yes.
You add it to retain earning. But if you have a loss, what do? You
Okay.
less it from retain
Yes,
earning.
sir.
So if your retain earning is
Okay. Okay.
162,500 minus 52,500, that's
152,500
110.
yes,
minus, okay,
That's 110,
52,500.
Abby.
yes, sir.
Okay. Minus
Now let's look
90.
at it. We are supposed to have 110 as our retained earnings.
Okay.
But now, in our retained earnings, when we deducted 162 minus 90, how much do we have?
110
We have 110.
You
should be
did
at
not.
the
You did not
top.
deduct it.
No, 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 no. I deducted retained earnings now. This is my retained earning. 90
Yeah,
minus
it will be 20,000.
162.5. Eh?
Yes,
That means should be
That is
52,500.
72,500,
it will
pa.
be 20,000 as the answer.
Yeah.
Where do you get the 20,000?
Yes,
This one should be
22,000.
52,500.
So,
minus
The
okay,
fifty-two
now I
five
have
hundred.
seen the dividend.
Sir?
I've seen the dividend.
return 20,000.
Do you understand? I have seen the dividend. Now, when we deducted our retained earnings of 162,500, we had a loss for
Two
the year
five
which was
hundred.
52,000. 52,000 minus 162,500 is how
Fifty-two
much?
five 52,500.
What is she saying?
What
You
am I
Fifty-two
don't
saying,
thousand five
Baba?
hundred, sir.
Eh?
110.
No, I mean loss. Loss for the year is 52,500.
You are not hearing us. You are saying something different from our own. We said we have 162,500 in our retained earnings before, right?
Mm.
And now we have 90,000. The difference there is 110,000, right?
Mm.
Right? Now 110,000. Whereas what should have left this retained earning is this loss for the year, which is 52,500. Where is it, Chef? This 52,500 is what would have left this retained earning. Do you understand? Can someone hear me?
So please, what did you say again?
So I'm saying that our retained earnings, we have 162,500 minus 90,000, right?
Mm.
Now, it means that our retained earning has reduced by how much? 70,000,
And 25.
72,500, right?
Yes.
And
Then
this 72,500,
minus 52,
we have
500.
loss in the account, which is 52,500.
Mm.
Am I right?
Yes.
So 52,500 is what ordinarily. So this is what we are saying. I have 162,500 in my account.
Mm-hmm.
Now, this year, instead of making profit, I did not make any profit. Instead, I made a loss of 52,500.
Okay.
That loss of 52,500, shebi I will deduct it from what I have initially in my account, right? Am I right?
Yes.
So which means in my account, if I had deducted from this 162,500, if I had deducted 52,500, which is loss for the year, and then I deduct what I have as the closing balance of 90,000, what is the difference? The difference is my dividend paid.
Wow.
So now, if I have 162,500 in my account and I deducted 52,000 loss from it, 52,500 from it, how much am I supposed to have? I'm supposed to have 110,000, right?
Mm.
Am I right?
Yes.
This is it. Retained earnings. For retained earnings. What's the balance brought forward?
162, 500.
162,500, right? Then loss for the year. If I have a profit for the year, I will add it to it, right? But here I have a loss for the year, which is how much? 52,500, right? How much will
Yes.
that give me? That means I'm supposed to have 110,000 in my account. Is that not so?
It is.
But instead of having 110,000, I have a balance carried down of 90,000. That means something has left my account,
Mm.
right? That means I will need
Yes.
another payment. And what is that payment I can only make from my account? If I'm to make a payment, then it has to be dividend.
Mm.
So that 20,000 is the dividend
Mm.
paid. Do we understand?
Yes, sir.
The 20,000, yes, ma'am. So the 20,000 is the dividend paid. 20,000 is the dividend paid, which is minus 20,000. Now, if I'm doing minus 20,000, it means I've factored all my uh, retained earnings, right? So that means I've factored everything in. Shall we proceed, please?
Yes, sir.
So what do we have now? In total, please. I think this will be wrong now. I have 5,000 naira here. How? I thought there was something I was having before. I thought there was something I was having before. 72,500, okay.
Retained earnings.
Yes, so I have 5,000 naira positive now. Any question, please? So whatever I have here in all of this should give me cash and cash equivalent for the year. And how much is that? 27,500. Now, in your cash flow statement, you can always know whether you are right or wrong. And how do you know? Before you start, you can do a balance cash at the end. How much is your cash at the end? How much is the cash and cash equivalent at the end of the year? Yes. How much is our cash? We have bank here, Abi. We have 25 at the beginning, we have 30,000 at the end, right? So we have 30,000 at the end, cash at the beginning. Cash at the beginning is how much?
2,500.
2,500. Once you less your beginning from your end, you will know whether you are right or wrong.
We are right.
30,000.
This is 27,500. What do you say
30,
now?
sir.
Ma? What do you say? So this is the cash flow you are looking for, 27,500. Have we gotten that 27,500? Yes. That means we are done. So this will give us cash and cash equivalent
Obo.
for the year. All right. So also you can have a cash and cash equivalent at the beginning of the year and at the end of the year. All right. So you can have at the beginning of the year as well as at the end of the year. Any question from anyone? Any question? Any question? So what's our cash equivalent at the beginning of the year? 2,500. It's positive, right? So once it is positive, you will definitely have your cash at the end of the year, which is 30,000. Any question? So in the absence of question, we hang our books here for this night. See you all in our next class. So I'll screenshot all of this to you.
So will you be sending this now?
Yes, I'm sending it right away.
Thank you. Look into it. So I have a personal question I'll ask in your DM. I don't know if you will be available now.
Go ahead, sir.
Is it now or should I ask in your DM?
Anyhow,
It's okay. It's just I think it's a question I was doing on racial analysis. You know, this
okay.
question also has data analysis. So it's about two companies. They were comparing two companies. Then we're asked to adjust the first company to historical cost since it was used for evaluation at first. You get what I mean, sir?
Yes.
But like at a point, I just saw the Pathfinder. They just wrote 10,000, we value it at 10,000, like at the answer. They were just writing use 10, subtract on 10,000 from this one, subtract 2,000. I was not asking myself where are they getting 10,000, 2,000? Nowhere.
Okay. Okay, so I understand your points now. Okay. Uh if we have time, so this is what you will do. It's not something we can do in this class, not tonight, and I'm not sure we can do it in another class. What ratio analysis, right? Maybe when we get to it in our class,
Yeah.
we can treat that question. Or you send it to me personally. You can send it to my DM. I'm not saying I'll do it this night though,
Okay, sir.
because this night
I'll
is gone
send it.
already. I need to prepare for my uh, for the week. Okay.
Yes, sir. I'll send the question to you.
Yeah. So let's do that. All right. Good night, everyone. See you all in our next
Good night.
class.